I hear a lot of people say that the economy is too big to fail, and whatever happens, it won't touch their bank account. That's exactly why most Americans are completely unprepared. But here's the hard truth. The next financial crisis isn't coming. It's already brewing. Between America's staggering debt, the escalating conflict in Iran, and AI reshaping jobs and markets faster than anyone can react, we're sitting on a ticking time bomb. And if you don't act now, it could wipe out years of wealth, security, and your peace of mind. I'm going to show you the 7 major warning signs that America is headed towards a financial storm, what they mean for you, and how to actually prepare before it's too late. Before we begin, if you want to support small channels like this one, it would mean a lot to me if you'd hit that like and subscribe button. Now, let's dive in. So let's start with the obvious. The US is drowning in debt. The national debt just passed $37 trillion. That's more than our economy produces in a year. And the interest rates are rising too. That means the government has to pay more just to service its own debt, leading to less infrastructure, less social programs, and less emergency support. Most people just think this is someone else's problem. But here's the reality. When debt hits this level, it can trigger inflation, dollar devaluation, and even a potential debt crisis. That means your savings, your 401k, your investments, all of it can lose value faster than you think. And it doesn't even take a total collapse. Even a small panic in the bond market can cascade into a crisis in consumer credit, mortgage rates, and stock markets. That's why ignoring debt is the single biggest financial mistake that most Americans make. Now, let's talk geopolitics for a second. The ongoing conflict in Iran isn't just a headline. It's a global economic accelerator. Oil prices have already surged 40% in the last 6 months alone. Energy costs ripple through everything. Transportation, agriculture, manufacturing. Higher costs means higher inflation, slower growth, and more stress on the average household. Even worse, the risk of an escalation is real. If the conflict spreads, global markets could freeze, the supply chain could collapse, and the US defense spending will skyrocket. And that increase in defense spending is going to have to come from somewhere, like your taxes, your borrowing, or the Federal Reserve printing even more cash. When this global instability meets an already fragile economy, markets don't gradually adjust, they panic. And if you're not ready, this panic can wipe out your wealth in an instant. And another part of this collapse has to do with AI. AI isn't just changing jobs, it's changing everything about the economy. Automation is already replacing millions of routine positions, for consumer service to white-collar finance, and it's not stopping there. AI is already moving into investment algorithms, market forecasting, and even corporate decision-making. And think about what happens if the stock market starts being driven by AI. AI that can make trades faster than humans can even react. One system error and we could see major volatility. And this could become more common than it ever has before. Combine that with the Iran war, rising debt, inflation, and you've got a perfect storm. Traditional market signals no longer work, and humans are essentially playing catch up with AI while the stakes continue to skyrocket. Everyone talks about transitory inflation, but let me break it down. Inflation has roots in too much debt, too much government spending, and supply chain shocks. And that's exactly what we're seeing right now. Energy shocks from the Iran conflict made it worse. AI may help lower some costs in the long term, but in the short term, automation causes unemployment in sectors that can't pivot fast enough, reducing the consumer demand and creating more instability. And here's the point I'm really trying to make. Your paycheck isn't keeping up. Your grocery bills, your rent, your gas, everything's rising. I'm sure you guys have felt it. And if you're not investing or protecting your money, your purchasing power is being eaten alive, and cash is no longer the safe play. Most people assume that the markets always go up, and that's a myth. The S&P 500 is up in the long term, but in the short term, a combination of rising interest rates, geopolitical shocks like Iran, and AI-driven volatility could trigger a serious drop. Investors love to say to buy the dip, but for most Americans, a 20 to 30% drop could mean serious setbacks in retirement funds, college savings, or emergency reserves. And remember, panic selling is contagious. When markets crash, people make emotional decisions, selling low, buying high, or simply withdrawing and waiting for stability that never comes. The lesson here is that the markets are fragile. It doesn't take a full-blown recession to ruin someone's financial year. Now, while the national debt grabs headlines, consumer debt is quietly piling up. Credit cards, personal loans, auto loans, most Americans are carrying balances at 20 to 30% interest rates. Combine that with the rising inflation, higher energy cost, job disruptions from AI, and suddenly, people are defaulting faster than the headlines want to admit. And defaults aren't just bad for the individual, they feed systemic risk. Banks get nervous, lending tightens, and suddenly the economy slows down even more. This is exactly how small problems snowball into a crisis. Here's the brutal truth. Most Americans don't have enough emergency savings to cover even 3 months of expenses. Most are living paycheck to paycheck, and the ones that do invest, they're mostly in the stock market without a plan for volatility or geopolitical risk. You can't rely on the government to save you, you can't assume that the markets will always go up, and you can't hope inflation just goes away. The only control you have is over your own preparation. That means emergency funds, diversification, and alternate investments can be a huge opportunity for Americans to make money during this crash. So what do you need to do right now? Number 1, build a real emergency fund. 6 to 12 months of your expenses so you don't have to worry if we do see a major crash. Number 2, diversify your investments. Stocks, bonds, ETFs are considered global assets to hedge geopolitical risk. Number 3, reduce your high interest debt. Credit cards, personal loans. The moment rates rise, these can spiral out of control. And number 4, make a game plan. The Iran war, AI disruption, inflation spikes. Map out what you'll do in multiple worst case scenarios. Remember, this isn't panic, it's preparation. History has shown that those who anticipate change, act early, and remain disciplined enough not only to survive the crash, but to thrive. So if you're watching this and thinking, that won't happen to me, ask yourself, how many people in 2008 thought that the housing crash would touch them? How many people in 2020 thought a global pandemic would wreck their finances? The truth is, crises are never fair. And they don't give heads up beforehand either. But this is your opportunity. If you act now, think ahead, and prepare your finances, you can come out of this next storm stronger than anyone around you. So don't wait, don't hope, don't sit on the sidelines, because this isn't just a financial crisis. It's a test of discipline, preparation, and courage. And for the people who pass, they're the ones who will own the next decade of wealth and opportunity. So that's all I have for this video. If you've enjoyed, make sure to like and subscribe, and drop a comment about other topics you'd like to see me cover and any games you'd like to see me play in the background. I'd love to get your opinions on all of this and what we could potentially see coming next. So thank you all for watching, and until next time, keep stacking that cash.